Hello and welcome everybody to today's commodity market analysis with the Gold and Silver Club for the 16th of March 2017, presented by myself, Phil Carr. Now, during today's session, we will be covering live market analysis. We will go through a watch list of trading opportunities. We will be providing you with a forecast of where we expect gold, silver, and also crude oil to be heading next. We will be answering questions and, of course, providing live support, as well as going through the top trades of the week. Now, before we get started, let me introduce you to the Gold and Silver Club. The Gold and Silver Club is the #1 commodities trading and investment coaching company. We are regarded as the go-to authority on commodities trading. As internationally respected experts, our analysis and our opinions on the metals, the energies, and the agricultural markets, they are routinely sought by major financial television channels and publications, which includes Bloomberg, Reuters, CNBC, the Financial Times, the Wall Street Journal, and of course, it is a pleasure to be here on FX Street as well. Our team of experts has trained and mentored over 100,000 private traders from all over the world to increase their wealth and generate a substantial income through commodities using our exclusive research-driven strategies. For more information on the Gold and Silver Club and our expertise, please visit our website, which is www.thegoldandsilverclub.com. Okay, before we go into the charts today, first of all, we'll just have a look at the overall performance of the market since yesterday's FOMC statement. And as you can see here, it has had a large impact. So yesterday's FOMC statement went ahead as expected with an increase in interest rates. However, overall, the FOMC statement was perceived as dovish. And with that, we did see essentially commodities rally. We saw the US dollar break down, gold broke out, silver broke out, oil broke out. You can see here palladium, platinum, a number of commodities have rallied whilst the US dollar has sold off. In fact, the US dollar yesterday was down over 1%, quite a significant breakdown, in fact, of support for the US dollar, which we'll have a look at shortly on the chart. And I hope some of you took advantage of that, the move that we got, especially on gold and also oil as well. Gold and silver have been some of the strongest performers off the back of yesterday's FOMC statement. It's definitely created some big surges for those markets, which we'll have a look at on the chart. So with that, first of all, we will bring you over to have a look at gold first, and then we'll break it down for you, the correlations. We'll look at the US dollar, we'll look at gold, euro, we'll look at silver, and we will look at oil as well. As always, any questions or comments, feel free to post those into the chat. So first of all, we are going to start off here and we are going to look at gold. And if I just rewind 1 week and we go back to approximately this time last week and what was happening with gold, essentially we had seen gold break down after it rallied all the way back up towards a 200-day moving average, hit that spot on at 1,263 US dollars per ounce at the end of February. And since that point, we have continued to see gold break down. In fact, you can see here where we've had consecutive lower highs and lower lows here over the last 2 weeks, eventually causing a 50% correction in gold. Now, it is noteworthy as well, if we go back to approximately a week and a half ago, where we had Janet Yellen, delivering a speech, and also several FOMC members providing updates revolving around the March 15th FOMC statement, which has just passed. There was overall a lot more confidence in the Fed going ahead with an interest rate hike on yesterday's FOMC statement. And as a result, that was when gold was trading around 1,236 US dollars per ounce. As a result, we saw an acceleration in price to the downside for gold, silver, a number of other commodities. The US dollar rallied, and we saw to a certain degree that get priced into the market. So we already saw that get baked into the market, the prospect of the Fed going ahead and increasing interest rates. And I've had a lot of questions on this over the last 12 hours, really, since the FOMC statement came out, or just over 12 hours or so since we had that FOMC statement. And why is it that the Fed went ahead and they increased interest rates? Why is it that the dollar sold off? And why did gold, silver, a number of other commodities, why did they go up? Shouldn't they go down? And there's a number of factors for this, but one of those being that a lot of the move has already been priced into the market. It's a case of sell the rumor here and buy the news. Now, there's a few other factors, of course, which have gone into that. The overall statement was more on the side of the doves. It was dovish. In fact, where originally we were looking for more interest rate hikes to occur over the course of this year, that seems to have been a change now in terms of the aggressiveness which the Fed are going to go ahead with interest rate hikes over this year, although we'll see in the weeks and the months to come what transpires. But essentially, it was not as hawkish or aggressive. The Fed wasn't as aggressive as anticipated regarding interest rates this year, interest rate hikes. And as a result, that has provided a perfect storm for a breakout here on gold. Now, technically, we lined up quite well here for a breakout. We at the Gold and Silver Club have caught the trade at 1,212 US dollars per ounce. This is the level that we are in the trade at the moment. And overall, it's been quite a nice pop just yesterday into the close. And in fact, this morning we were up over about 210 points on this trade. We are looking short term for more upside here. So I would be looking for a bit more upside here. You can see right now as we're going into the US session that there's a bit of a battle around the 21-day moving average. We've taken out yesterday's high. We've already popped higher on gold here, and we're looking for some follow through, taking gold up to 1,236 in the short term. That is quite an event area. There are a lot of orders sitting around the 1236 to the 1237 zone. It is quite a major area here, and short term I would be interested in banking some profits at that level and then seeing how gold reacts. That's assuming that gold can get to that level. Typically after an FOMC statement, there is up to 48 hours of follow through. And normally you get, particularly if you see a big move like we did yesterday, and you would expect follow through going into today's close and also tomorrow. Now, by the end of the week, things could change. We could get into an overbought condition short term for gold. The US dollar might then be in a significantly oversold condition, could snap back as we go into next week. But momentum right now is on the side of the bulls. The buyers in this market have the upside advantage. The bulls in this market are in control of the chart right now. And I am looking for more upside short term here. I'm looking for approximately about another 90-point move, taking gold up to 1,236, around that zone in the short term. And then we will see how gold fares once it gets to that level. If we do get to that level, what I would also be aware of at the moment on gold, if we go out here, we can take a raw chart at the moment, is the possibility of gold coming up to around the 1236 zone and creating a lower high here as well. So what that would look like would be the potential for gold here, and I will just draw on these levels here. So around the 1235 to 1236 zone, a potential breakout to that zone. If gold cannot get above that level, if it pauses at that zone, it does have the potential again for a head and shoulders pattern, the potential to roll over and break down lower. So I would be careful here in terms of not getting too aggressive on gold at this level. I'll be looking soon to take profits on a revisit the upper end of the trend channel. If gold on a closing basis, if it breaks above 1236, I would look for a move back up towards the recent highs here of 1264 if gold can do that. Otherwise, I would be looking for the potential of gold to then come back down again, get exhausted at this level, and then I would look for the potential for the US dollar index to also start to get supported. Short term, the US dollar index looks weak. We've also broken below a bear flag formation. Yesterday's move on the FOMC statement, we saw quite a considerable breakdown in price here. We've broken below a number of key levels, support, and we've come all the way down to the monthly pivot. Essentially right now we're sitting below the 50 MA, the 21 MA, and also the 100 MA. We're below quite a lot of key moving averages. And if we can break below the 100 zone, and particularly if we break below 99.75, I really don't see a lot of support here for the US dollar index. We might get a little bit of temporary support around that, just above the 99 zone. Beyond that, I would look for a retest on the US dollar coming down to the 200-day moving average. That's what I would look at over the next week or two here. Might happen quicker than that. Actually, I would look at that happening quicker than a couple of weeks. I would look for that to be a fairly short and sharp move before the dollar would then retrace and then continue with its overall upward trend. That's what I'm looking at the moment. So essentially, short-term momentum is to the downside for the US dollar. I would expect us to break down further today. If we can break below yesterday's low, we should see momentum increase to the downside, and then we might have the potential for another wave lower coming down to hit the 200-day moving average, and at that point get supported and then continue the momentum to the upside, at which point I would expect gold, silver, a number of other commodities to then pull back as well. So short term, I'm bullish a number of commodities, including gold, silver, and I'm bearish the US dollar short term between now and the end of this week. But then I'm looking at the next trade opportunities which will be forming. Now, if you trade gold against the US dollar, you must be looking at gold versus the euro, which tends to lead gold versus the US dollar. That has been the case throughout most of 2016 and also 2017 here as well. So first of all, if we have a look at gold versus the euro, you will note where we've come all the way back down to a major underlying trend channel. We've also, in terms of corrections here on gold euro, you can see where we've come down and we've retested approximately around the 61.8 Fibonacci retracement level. So it's still within an upward trend. We could see any market, being gold, silver, whatever market we might be tracking, it can still remain in an upward trend once it retests its 61.8 Fibonacci retracement level, which is what we've done there. We've overshot the 50% level. There's an underlying trend channel on this chart. It could be a point here where gold against the euro does hold support and continues this overall upward trend, certainly in the short term. We've broken above key resistance. We've broken today above also the 50-day moving average. I'm not surprised to see a little bit of a pullback here as we go to start off the US session, but I'm ultimately looking for gold against the euro to close towards the daily highs and follow through between now and the end of this week. So I would also look for follow through in the short term for gold versus the US dollar. So right now, momentum is on the side of the bulls. I'm looking for more upside on gold euro, gold US dollar. And in fact, if we go over and have a look at silver now as well, silver also, no surprises there, had quite a considerable pop to the upside yesterday. Silver was one of the best performing markets yesterday off the back of the breakout that we got on the precious metals. And if we have a look at silver right now, we've closed with a bullish engulfing candle yesterday, broken above a number of areas of resistance. Again, not surprised to see a bit of a pullback, profit taking at the beginning of the US session here. I am ultimately expecting silver to close the day higher towards the daily highs. We'll get some back and forth price action now as the US dollar has retraced a little bit over the last hour or so, but ultimately later on in the day I'm expecting silver, gold and a number of commodities to close near their daily highs. I'm looking for follow through between now and Friday for upside momentum on commodities. So far at the moment, silver also has found support just above the 61.8 Fibonacci retracement level. Like gold, it's also corrected over 50% of its move. In fact, the correction on silver was more severe. Silver has given back all of its gains over February. In fact, over the last week and a half here, it's been quite a significant pullback. If you'd been long silver and buying silver throughout January and February, you definitely would have wanted to trail up your stop loss because it's given back a lot of those gains, gave back all of the gains from February. But now, yesterday, we've had quite a considerable pop higher. And the big question here again is this going to be the start of a much larger move higher here, or is it simply going to rotate back towards resistance, create a lower high, and then come back down for a potentially for a seasonal play here is what I would look at potentially here as we go into April and May, which tend to be weaker overall for the precious metals. Although, having said that, the overall fundamental backdrop at the moment is a little bit uncertain as well, with Article 50 to be triggered later on this month as well, where we could see some repositioning in portfolios and we could see a considerable increase in inflows to gold and silver in the lead up to that, which we'll be looking at on a regular basis, particularly from the commitment of traders' point of view as well. So that's something just to be aware of, but certainly right now I'm only looking for short-term upside, and then we'll have to reassess once we are at the close of this week. Now, moving over to oil. Oil has also presented some good opportunities over the last few days. So certainly last week, catching the move to the downside for 325 points, this final breakdown in price, which we've been discussing for a while now on our weekly FX Street reports here. We've been looking for a breakdown in price, which is what we got last week. We caught that breakdown. We've exited the long position. And in fact, short term, we have actually reversed position and we've gone for a long, but we're not looking to stay in this position for a big duration of time right now. It's a very short term trade, taking advantage of retracement. In fact, the first level we were anticipating the crude oil to hit has already been hit here, which is at the daily highs around 50 US dollars per barrel. You can see immediately we've come into some resistance here, formed a rejection candle. If we close like that today, if we close with an inverse hammer here, we'll bank the rest of our profits on this trade. But if it closes with a positive close, if it closes above yesterday's high and we close with some sort of a hammer or a doji on the daily chart, and it looks like we are going to get a V-shaped reversal pattern in the short term here, we'll maintain the short term buy here. We're looking just to trade it back towards the levels where it broke down from previously in order to trade that for a retracement, and then we might be looking to then reverse position and then go short again, taking oil lower. Now, in fact, if we go over to the weekly chart, this is where oil gets a bit interesting at the moment, because what we've essentially seen, if you go over to the weekly chart and bring on your trend channels, this is a little bit subjective in terms of the trend channels here, but overall try and link up as many of the closes and also the spike lows as possible here as well. And you will see here where we've got a parallel trend channel. We've come all the way back down to revisit the lower end of the trend channel on a weekly basis. We're finding support where you would expect to get supported on a weekly basis. And if we close the week with a rejection candle, similar to what we saw going back to July last year, it does actually have the potential to then rally back towards the upper end of this trend channel here. Okay, so I'll be looking for the potential on a weekly closing basis. If we close like this or slightly stronger with a hammer, and then if we breach above the weekly highs here, we could see a rotation higher again here for oil. So I'm being a bit flexible with oil right now in terms of the next stage of this move, because from a seasonal point of view, typically as we go towards the end of March and April, if you go back to the last 5 years in particular of oil seasonality, this is not a bearish time of year. Although throughout this year we have played out with seasonality, it has played out very well over January and February and March so far. But going back to the tail end of last year with the OPEC meeting, we have seen essentially oil not follow its usual seasonality over November and December of 2016, which is where we normally see oil break down in price as opposed to breaking down. It went up over 10% after the OPEC announcement where they agreed to go ahead with output cuts, and we saw a 15% move within 1 week after that announcement at the end of November, beginning of December, which was the move here to the upside, which is unusual for oil to do that at the end of the year from a seasonal point of view, but obviously fundamentals trumped seasonality at that point in time. But where we are right now, I would say oil is at a decision point. Now, from most of the positions which I'm aware of being in the market right now, is that it does tend to be slanted to the downside at this point in time. Now that we have cracked through a very important layer of support, now that we've broken down considerably, the overall formation here on the chart is in favor of the bears here. The bears are in control of oil at the moment, but at the same time there are short-term opportunities, retracements to take advantage of, particularly as we formed a bear trap earlier on in the week where we broke down in price, came down to 300-day moving average, reversed into the close, follow through yesterday after the FOMC statement. Now today is decision time. So if we do close with an inverse hammer on the daily chart, then yes, we could see oil have another surge lower here. But if it closes with a higher high, higher low and higher close, we could see a continuation and essentially a V-shaped reversal pattern. So very interested in oil to see really which way it's going to play out over the course of today, and also on a weekly closing basis as well. I'm watching these levels very closely too. So definitely keep that on your radar. So that is our projections at the moment with gold euro, with silver, and also oil. Now, a couple of additional featured markets for you right now as well. I would also, for those of you who trade the softs, I'm aware that not as many of you do trade the softs, but for those of you who do, coffee is an interesting market to look at the moment. It's been consolidating for a while now. It's actually broken out of the pennant earlier on this morning. It has found support, a major underlying trend channel at the 76.4 Fibonacci retracement level. For me, if it can continue to follow through over the course of today and get a breakout above this pennant, close above it, then we're up and running again. And coffee, if you trade coffee, you will know once it forms a breakout, it can get going incredibly fast. A lot of the previous breakouts here, you can see consecutive higher highs, higher lows over a number of days, which can lead to very fast moves here. If you get in at the right time, you can really take advantage of these moves on soft commodities. So at the moment, overall, I'm looking for short-term upside with gold. I'm looking for more upside here with silver. At the moment, also gold euro. I'm looking for momentum to the downside with the US dollar only in the short term between now and Friday, taking advantage of a potential breakout here on coffee. There are a number of other opportunities lining up in the markets as well at the moment. But if you would like to find out more, if you like this sort of analysis, guys, if you'd like to be kept updated throughout the week of our live trading rooms where we go through the exact trades that we take during the course of the week, which includes exact entry, exit, trade management, the full life cycle of every trade. If you like today's analysis, you'd like more of this on a regular basis, including our week ahead trading plans every week as well, do make sure you go across to the Gold and Silver Club website, go to www.jointhegoldensilverclub.com, complete the application form, and we will get in touch with you ASAP. Okay, so if you like what you heard today and you'd like this on more of a regular basis to get exclusive access to our private members live trading room, just go to www.jointhegoldensilverclub.com and complete the application. Now, in terms of our portfolio performance, these are the top trades that we have had over the past week using our exclusive research-driven strategies. So, of course, we've taken advantage of the breakout on gold. Now, this is an open position that we entered yesterday. Just before the session, we were up approximately 210 points profit on the trade, and we're looking for slightly higher prices coming up towards the next major level of resistance around the 1236 zone. So that is our open position on gold right now. We've also taken advantage of weakness in crude oil over the last week here. We hit our profit target last week for 320 points profit here, hitting the 49.50 level spot on, and also gold euro, as well as gold against the US dollar, which we were shorting last week. We shorted gold euro, which actually moved further than gold versus the US dollar. Remember, it leads gold against the US dollar. We caught a 280 point profit sell short on that market as well. So those have been the top trades over the last week. We've got several open positions on at the moment as well. There's opportunities to get into those for those who are interested and would like to receive more updates about our exact entries, exits, take profit levels. If you would like access to our live trade setups shared with you, ready to implement for instant results, all you need to do is go to www.jointhegoldensilverclub.com. You get access to our live trading room webinars throughout the week. You get trade emails and notifications via SMS and email, which essentially alerts you to our exact entry, exit, take profit, the overall life cycle, the whole trade life cycle of every single position that we are taking. And you get access to our commodity research and our market insights at the Gold and Silver Clubs. That is available exclusively to our private members. You get access to our proprietary trading research, market insights to really help boost your win rate and give you the ultimate edge. So again, by being a member of the Gold and Silver Club, you get exclusive access to our live trading rooms during the week. You get our live trade setups, real-time notifications via email and SMS, which includes entry, exit, stop loss, take profit, the full life cycle and trade management of each trade, a weekly trading plan with a watch list of trade ideas for the week ahead, live support. You also get institutional level trading research and commodity insights to give you the ultimate edge in the market. So again, guys, all you need to do is go across to www.jointhegoldensilverclub.com, complete the application form, and we will get in touch with you ASAP. Okay, fantastic. So I do hope that a lot of you had a profitable FOMC statement. If not, and you would like to find out more how to be profitable in the future, do make sure you get in touch with us. I wish you all the best. Thanks again to FX Street and the team for putting on today's session. We look forward to speak with you all real soon. And of course, I very much look forward to working with those of you who will be making an application to join us at the Gold and Silver Club. Okay, guys, so take care, all the best, and we'll speak to you very soon. Thanks, everyone. Bye-bye.